Checking for audio. Sec. Let me know, guys, if the audio is fine. Let me know if the audio is fine. Okay. Just checking. Can hear the audio. Should be fine. Okay. Let's just wait for 2 more minutes before people join, so that more people can join, etc. etc. Today we're going to do a couple of things. Today we are first going to review Tata Elxsi, because I put on the post yesterday as well in the community post that I'm currently taking out some allocation of Tata Elxsi and rejigging it a little bit, putting it back into some other stocks. I'll tell you which are the other stocks that I'm buying, which are the other stocks that I'm entering as well, new allocation, fresh allocation, everything, right? So we'll talk about that today. Why am I doing this? And also I want to talk about the two things, which is what are the two things, right? I want to talk about the two things which are the two schools of thought. What are the two schools of thought? One is saying that, okay, coffee can investing means you should not reallocate this. You should just leave it the way it is forever, right? The other school of thought is saying, no, you should also reallocate. And when something goes a bit too much, which is overvalued right now, you should reallocate that into something that is slightly undervalued or that is not moved up a bit. So we'll talk about all of that. We'll talk about all of that today. Let me just check once more. Audio is fine, right? I think audio came and went. Akash is saying, no, audio is fine. I can hear the audio, right? So that is one thing. Second, I'll talk about the 50K small case as well. Nothing to add there though on the 50K small case. There is nothing to reallocate, nothing to do anything. चल रहा है अभी अच्छा चल रहा है, so do not worry about it, do not think too much about it. If you had averaged, you would have been in some crazy profit right now, but if you have not averaged it, then it is completely fine. If you want to average it, you can still average it, but we'll talk about all of that as well, right? Can you talk about Sharda Crop Chem? Okay, yeah, we can talk about Sharda Crop Chem as well, so not an issue there also. What else? Yeah, so basically we'll talk about these couple of things today. So before that, I just want to tell you that I didn't come for 1 week. You might have seen that in the last 1 week I didn't put any videos. I was only putting shorts. I didn't put any long form video, mainly because I got COVID for the third time, which is the most annoying thing. So I got COVID for the third time, I think a week ago, literally one and a half weeks ago. I had to get admitted for a few days, a few hours as well, not days, but few hours, because my tabiyat bahut kharab ho gaya tha. But now I'm fine. Now I'm fine. I've recovered. So now I'm back to like long form content again. Because at that point, boss, there is zero energy to shoot anything and my throat was gone. So every time I spoke for 5 minutes, my throat was finished, right? So now all good. Now back with my coffee. Everything's fine. Chalo, today let's do, it's been a while, so there's lots to catch up on. So let's do a little bit of fundamental analysis. Okay, first let's look at Tata Elxsi. What has been happening with Tata Elxsi? Let's look at that first, okay? And in the end, I'll also talk about something new that I'm doing. I want your opinion on it. Would it be nice? Would it not be nice? I'm doing something new, like a new concept. So I want your feedback on this concept as well. Okay, so let me quickly screen share mode. Let's go into Tata Elxsi. Now, by the way, I don't know how many of you all have been seeing this. I don't know how many of you all saw this. But do you guys know where we are at right now? Do you guys know where we are at right now with respect to where Nifty is at right now? Nifty is in a very crucial position. For all the people who don't know this, we are in a very crucial position right now. What is the crucial position? Look at this, right? We are in a very crucial position right now. So as I told you, right, the stock market never goes in one direction. It goes up, down, up, down, up, down, up, down. So we are currently literally at that crucial position right now, where it has hit this top, whatever, 2-3 times in the past. Okay, it has hit this top 2-3 times in the past as well, and it has gone down quite drastically after that. We are very close to the same Nifty resistance that is there. Now, for us to go back into a normal market, right, for us to go back into a normal market, we have to somehow break this exact barrier point. The minute we break this, we're back to the good old days, right? And then we'll see a slow, it won't go like this. We'll see a slow movement of the stock market, just like how we've seen the stock market move like this. We'll see a same movement here. Now, what was this phase called? Okay, now I want to ask you guys a question, right? What was, can somebody tell me in the chat, what was this phase called? Whatever phase we saw right now, which I called it the golden phase, right? Remember, I kept saying that this is the golden phase, this is the golden phase, this is the golden phase. This entire phase that we saw right now, what was this in the grand scheme of things? Can somebody tell me in the chat? I want to see how many of you all have actually followed me for a very long time. This is something that we have witnessed before. This is, as I said, the golden period. Hopefully the golden period continues, but I don't think the golden period will continue because all the bad news have been factored into it. All the good news have also been factored into the market right now. Both good and bad news have been factored into the market, right? So this entire zone, yes, I think a few guys got it right, is called the accumulation phase, right? The accumulation phase. I don't know how many of you all saw my previous YouTube video, the one just before this, where I spoke about log charts. And if you see that video, the log chart video, which I don't know how many of you all saw it, but it's not a stock related video, but it is definitely very important for you to understand what is happening in that space, right? Because if you understand what is happening with respect to log charts, if you understand what is happening with respect to the stock market, you will understand where we are at right now. You will literally understand. If you want to go through it, I'm just pinning this here. You can go through it later on. Okay. Now, this was called the golden phase or the accumulation phase. This is where you accumulate the most, right? And when the market was somewhere around this point, I kept screaming and saying, whoever wants to average, average, whoever wants to average, average. Now, I want to ask a question in the chat. How many of you are scared to average? How many of you guys were scared to average at that point? I know, obviously, everyone is scared to average. Why? Because you don't know what is going to happen. It might go down even more, and we were so scared because it had broken 15,690. It broke this point as well, right? And everyone started saying that we're going to go to 14,000. Everyone said 14,000 is the next barrier, right? But right now, suddenly we saw a massive comeback. By the way, how many of you all saw the inflation data yesterday? I don't know how many of you all saw the inflation data yesterday. That also came out really well. Right? We're coming down to around 6.71%. Retail inflation eases to 6.71% in July. 6.71. Do you know how much is the inflation data for US right now? It is amazing. I don't see, for guys who don't know economics or for guys who don't understand finance, okay, this is a beauty, right? I don't know how many of you all, I'm not being very different, I'm not being political here, but what we have done with respect to our country, the way we have handled our finance, the way RBI has handled the finances this time has been beautiful. Right? And we are not taking that level of impact that we should have taken according to other countries. So we are in a very good spot, but US is in a bad spot. So it is a very proud moment to see about with respect to India, that it is in a good spot right now with respect to world economics. It is respect to world economics, not politics, world economics. We are only finance guys, right? Okay. Now, so whatever it is, coming back, we are in this point where it looks like either two things are going to happen right now. What are the two things that will happen right now? We break this, okay? We break this and we see an upward momentum towards 20,000. Great stuff, right? If we break this, we are awesome. But the other scary momentum play or the other scary bit over here is what? Can somebody tell me what is the scary bit over here? The other scary bit is, what if it starts going down? What if this goes into a reverse pattern and again goes back somewhere here or back to 15,000 or back to 16,000? We're currently at 17,700. Now, if you look at everything that's happening with the world right now, currently there is nothing that is too bad and there is nothing that is too good right now. Both sides are neutral. कुछ bad news नहीं दिख रहा है मेरे को, कुछ good news भी नहीं दिख रहा है मेरे को. So for it to break this resistance, it needs some kind of a good news, or no news at all is also good news. If there is no news, it will continue to go in this way, right? If US is screwed, where will all the people invest their money? Okay, whenever a emerging market like US gets into a problem like this, the money goes into a developed country like US goes into a problem, money goes to emerging nations like India, right? So hopefully we get more FIIs that will come down, but we don't want it to go down. Okay. Now, for all the people who have fresh money right now, or for all the people who have new money right now, what should you do? This is not a good time for you now to invest. Okay. For the next 1 week or 2 weeks, you wait. Is there any problem for you to wait for 2 weeks? No, right? Wait for 2 weeks, mark this level or mark this barrier and just say, let it cross this. No, if it crosses this, fine, you buy it after that. Then no tension, no problem. Just cross this little bit, right? But if it starts going into a downward trajectory, you know that you can buy again at a better phase because the accumulation phase is not over and it is going to continue. But if you buy right now, even if it starts dropping by 10%, your portfolio will take another 6 to 8 months for it to come back to break even, which is not good. So if it was me, what I would do is I would do profit booking here. This is a good time to do something called as profit booking. Means whatever profit you have in some good stocks, take out that profit and reallocate it into companies that are not doing well in your own portfolio, provided that these companies are fundamentally strong companies. Okay, provided they're fundamentally strong. Now, what have I done? Okay, for example, let me show you what I have done. I'll explain very clearly in detail. Now, I put a community post yesterday about Tata Elxsi. Okay, now Tata Elxsi has also been in a range bound pattern. We drew this, I think, long ago. I think 6 months ago, we drew this pattern. Tata Elxsi is in this pattern always. It's not broken this pattern. It goes down, comes back up, respects this line again, goes back up, takes a position till this one, and then comes back down again. We've seen this happening over years now. Okay, literally over years. From 2021, it's going in this pattern. But this is not a very good sign. Okay, look at how it was before and look at how it is now. Right? The reason why I'm saying this is, if you actually go and look at Tata Elxsi here, okay, the reason why I'm saying this, if you go and look at Tata Elxsi, by the Tata Elxsi is 363,000 now, market cap. We bought it at 3,300. Okay, now it is at 10,000. So we're already up 150, 170%. I'm personally up 135%, right? Now, if you look at this, it is currently gone up. So on a 1 year chart, you'll be like, it's awesome. But from a max chart, this is how it looks like right now. Right, so when it looks like this right now, boss, this is a time to be scary. Why? Because not only that, the EPS is currently, the stock P ratio is currently trading at 100. Now, usually the companies that are growing already have a high stock P ratio. Okay, please understand this. A company that is growing, if you look at Tata Elxsi has always been in a high P ratio. You cannot tell me that, Shashank, it is overvalued, because it has been overvalued from 3,000 rupees only, right? But it is constantly up only, right? Now, is this a good thing or bad thing? I'll tell you the problem here, right? Now, if in the next quarter, okay, let's look at this quarter results. This quarter results, it has given very good result. Okay, June quarter results, 726 crores compared to last June of 558, compared to last quarter of 682. So quite a good jump, right? Literally a very good jump, good operating profit margin, good EPS, everything has grown in the last quarter. Now, this is going up so much, mainly because it has been growing every quarter very well. Look at this, 595 to 635, very good growth. 635 to 682, 682 to 726, good. Now, can we assume that, will this continue to keep going like this? Do you think it will continue to keep giving good results? Every quarter it will give good results, right? It might give, next quarter also might be good, next quarter after that also might be good. But the day it gives one bad quarter, do you know what is going to happen to the company? The day it gives one bad quarter, what is going to happen is, everyone's going to be like, boss, we thought this was a fast growing momentum stock. It is not a fast growing momentum stock, because it has recently given a bad quarter. Whenever a company gives a bad quarter and it is trading at a very high stock PE ratio, what happens to the company? Boom, it starts going down. Okay, and it goes down back to normal mode. Okay, normal mode means come back to equilibrium. Now, there was one other stock that did the similar thing like this. One more stock was there in 2021 that was also going up like this, that had a P ratio of 300 rupees. Okay, very good stock. Everyone was talking about it. Gave one bad quarter, went down by 50%. Do you know which stock that is in the chat? Let me show you. Okay, it was Dixon. Dixon is now at 105. It was at 300. Okay, look at the P ratio here. It was trading at 182 at one point in 2021. 182, right? If you look at the stock price, let me go back to stock price. Look at this. Dixon had gone up to 5,500, then fell down to 3,300, fell down almost 40-45% around this October-November period, right? Whenever it went up, it also corrected in the same way, right? If you look at the quarterly results, look at this quarterly result. This one result, March 2022 result that came out. Even the 2021 result was not considered a good result. Why? Because the operating profit margin fell down from 110 to 103. So after September, till September, it was a darling, right? It was a darling stock. After September, when the December results came out, somewhere around this time, when the October-December, see, this is when the results came out. Till then, it was flying. The minute one bad quarter came from 5,500, it fell down to whatever 3,300. Also, the market also put it down because the market was also going through a wrong time. But this is how valuations correct. You get my point? This is how valuations correct. Divis Lab did not do anything wrong. Divis Lab, somebody was saying Divis Labs was not because of that, right? Bad quarter of Divis Labs. Divis Labs fell mainly because of the capex expansion. Dixon was this company that got corrected like crazy, right? Tanla also was, yeah, Tanla, another example which we saw right now about Tanla, right? Look at Tanla, I'll show you. This is very common with fast growing companies, huh? Now Tanla again, if I do max chart, boom, what is this? Like crazy, right? From literally 68 rupees to 2000 rupees. Is it sustainable? You tell me. You're a logical person, right? 68 rupees to 2000 rupees, mental case scenario type, right? 100 rupees PE ratio it is trading. Now it's back to 20 rupees. Now it's back to normal. Now it's like, boss, now in fact it's undervalued. It's currently undervalued. Tanla is a good buy right now, right? But look at the drop. Look at the drop. If you had invested here around 2000 rupees, your current valuation would be 50% loss, minus 50%. Again, mainly because of the current quarter result. Look at the quarter result, right? Growth, bad growth, finished, game over. 131 crores, so bad in this quarter, right? Finish ho gaya ye to 10 EPS also dropped, everything dropped, stock price also dropped. But from a year on year perspective, it's good. But from a quarter on quarter perspective, it became bad. So my problem with Tata Elxsi, even though I love the stock, right? But you can't be emotional when you're investing in stocks. I love this stock, right? I've been invested since 3000. We caught it. I remember when it was at 20,000 crore market cap, right? Laurus Labs, Tata Elxsi and Varun Beverages was our pick for the year, right? We saw that Tata Elxsi has given us our 100% for 1 year. Very good, very happy, right? Varun Beverages, I'm 44% up right now. Very good as well, right? Sharda Cropchem fell down. It was going up, fell down, but I'm invested because it's not bad. But I'll come to all of that. So now the problem is, even though I love this stock, I am not able to justify this valuation. I might be wrong. It might go to 20,000 also tomorrow, right? Because the next quarter can be good, next quarter can be good, next quarter can be good. But the problem is the day that one quarter comes bad, which I know it will come, the stock will fall 50%. So when the stock falls 40%, 30% or whatever, when it comes back to normal, which is 60 PE or 50 PE or 40 PE, which is still not normal, but whatever it is, it will come back down. Now another question is, do you know why the stock price went up 7.78% yesterday? Why did it go up 7.78% yesterday? Does anyone have any idea? Now the thing is, let's see if anyone can guess, okay, because we have to do connecting the dots itself, right? It has gone up 7.78%. There is no news in the market. No news in the market for it to go up 7.78%. But if I am an investor and I look at it, I know insider information has come. Somebody has done some insider information, or else it cannot go up 7.78% randomly. Aise matlab masti mazak mein gaya. Some news has come out. Now, if I had to predict, or if I had to understand, maybe, play with probability game or numbers game, right? What I would look at here is, Shashank, the stock price is trading at 10,000 rupees right now. The face value is 10 rupees right now. Okay, going down, checking the balance sheet, 1,500 crores right now. What does it tell me right now? What does this signify right now? There is either a news of a stock split, or there is either a news of a bonus, because ye to aa gaya, the result is already out, so there's nothing wrong with the result. So either a bonus or a stock split from the face value of it for it to go up 7%, with usually it goes up 7% when there's a superb result, but it's gone up just like that. We don't know what it is, right? So either a insider news of bonus or split, and we will come to know maybe in the next Monday, Tuesday, Wednesday, we will come to know, but something is there. We don't know. If you actually check the news, right? If I just do Tata Elxsi, one article has come yesterday, right? Look at this one article. This one article had come, which says Tata Elxsi brings new age solutions. That's the CMO has spoken about it, Nitin Pai, where he talks about driverless cars and connected vehicles, and we know about it. We know about this connected vehicle journey and what he's doing, right? But does it mean that it has to go 7% up in a day, almost 8% up? A bit too much. So maybe some insider news is there, we don't know, but let's see, right? But I have taken a safe call. I might be stupid, because tomorrow if a stock split come and a bonus come, I would love to keep it, right? I would obviously want to keep it for a long period of time, but I have already exited it yesterday. Not much. I have reduced the allocation from whatever it was, 130% up. I have reduced some 30-40% of it. And what have I bought? I have bought stocks in my portfolio that were in red. What were the stocks in my portfolio in red? Let me tell you, right? So I have averaged it out in this company. My Jubilant Foodworks is down 25%. Right? Only why Jubilant Foodworks went down? Is it because of a bad quarter? Is it because of bad results? No, Jubilant Foodworks basically went down because the CEO had quit, right? And the CEO had quit, which is nothing wrong fundamentally, because it is fine, right? The fundamentals of the company were strong. So I averaged out a little bit in Jubilant Foodworks, right? I was minus 25% down. I picked up a little bit more. Apart from that, I took a fresh entry. I took a fresh entry into Mahindra and Mahindra. Now, the reason why I took a fresh entry into Mahindra and Mahindra is because Mahindra and Mahindra also recently broke out from its recent peak, right? That means it's going to make new highs right now. There's another reason why I invested in, and the stock P is very reasonable, not overvalued. The reason why I've taken another interest in Mahindra and Mahindra is only because of the news that came out recently with Scorpio bookings. How many of you all know the news with Scorpio bookings? Right? They broke a record or something, right? I don't know, was it Scorpio or was it some other thing? I don't know. There was some news about, okay, not Scorpio bookings. So, let's check the Mahindra and Mahindra news. There was some news about, I forgot which company was that, but it broke some record, right? I don't know, I can't find that news right now. Let me check. This one, Mahindra Scorpio. Yeah. So Mahindra Scorpio, look at this, okay? Look at this very carefully and you see how I connect the dots and how I understand news. Okay, this was this, right? Now, if you look at Mahindra Scorpio, sets a new record, clocks 25,000 bookings in 1 minute, over 1 lakh bookings in under 30 minutes. Okay, this is the bookings that have come, 1 lakh bookings in under 30 minutes. Now, the main advantage of this 1 lakh, I don't know how many of you all are interested in cars, how many of you all know what is happening in the Mahindra space, but how many of you all remember the same thing that happened with XUV 700, right? You have to do bookings, but you don't get the car. This car is waiting for 6 months, 7 months. Do you guys know that? Car is waiting for 6-7 months, right? When the bookings happen. Now, when the booking happens, you usually give a small token amount. Okay, you don't give the full amount, you give a token amount. I'm not sure how much the token amount was here, but I think somebody told me it was 1 lakh, but I'm not sure how much it was, right? But you give a small token amount to book the entire vehicle, and they've got 1 lakh bookings into this. Okay, for an ex-showroom of their ex-showroom value, they've got 18,000 crores of sales already. Now, another very interesting thing is what Mahindra is doing, which a lot of people don't know, is that Mahindra is also doing something called as float play. FLOAT play. Do you guys know what float play is? Do you guys know what float play is? Okay. Do you guys know what float play is? I'll talk about it if you want to know, right? So basically, if you are doing, say, a booking, let's assume I gave only 1 lakh. Okay, I've given 1 lakh for booking, right? What happens is now, for the next 5 to 6 months, Mahindra is not going to give me the car. I have to wait, right? For the next, I don't know how much rupees it was. Okay, somebody saying 11,000, maybe whatever the amount is. Just take a fictional amount of 1 lakh. Okay, what happens is now this money is going into Mahindra's bank account. Okay, number one, this money is not going to be refunded to you for quite a bit of time right now. Number two, number three, Mahindra gets free capital. Free capital, it's called float play, free capital, right? That means they suddenly have a lot of cash to play around with for the next 6 to 7 months, and they don't have any interest on that money. It is interest free money that has been given by you guys. So the reason why a lot of companies are doing bookings, right, and then giving the car 6 months later is to build hype, also to get interest free capital. Very similar to my Starbucks video that you guys saw. See, understand how money works. It's so beautiful. 6, 7%, 8%, 10% they save money and they play on the float. This is called capital float, which is so beautiful, right? So now what happens is they have a lot of money, extra money to play around with. They can clear their loan. They can put it back into their capacity. They can do a lot of other things. But again, you need to have a strong, Shashank is right. You need to have a strong brand to play float. But Mahindra's killing it. Mahindra's killing it, right? Mahindra is doing well. People are paying that token amount just to book that car. So I have taken a fresh entry into Mahindra and Mahindra right now, and this is going to be for the next 1.5 years. Okay, because I believe automotive play is going to do well. They're going to launch their EV SUV also, which is coming up soon. Their debt is 50% less than Tata Motors' debt, so they're in a better position slightly from a balance sheet perspective. So Mahindra is what I have made a video about Tata versus Mahindra as well. You should go check that out as well, right? Tata Motors will also win. I'm not saying they'll not win, right? Mahindra will also win. Both will win basically, right? So I have taken a fresh entry into Mahindra and Mahindra right now. Apart from that, I have averaged a little bit of Clean Science. So Clean Science is a company that I've kept in my thing. This is another multi-bagger I'm betting on. I averaged, this was again down by around 10-15%. So I averaged Clean Science a little bit more. Mainly I'll show you, right? If you look at the chart, you will see that it's not moved at all. It's at 1600, IPO came out, 1600 even right now, not doing much. Basically, this is in the chemical space. Okay, it's in the Deepak nitride wala chemical space itself, FMCG chemical types, not in the nitride space, but in the chemical space. But if you look at the quarterly results of this company, every quarter it is steadily going up. Okay, it is a very good fundamentally nice thing to look at, that every quarter the results are going up. The operating margin is phenomenal over here. Every quarter the EPS is going up, and every quarter the overall sales is also going up. But for some reason the stock price is not going up. Maybe because, and it is a debt-free company with good reserves. So I'm taking a small bet on this company, because agar this company comes into the limelight tomorrow and institutional start looking at this, then the stock will start shooting up again, and I'm catching it very early at 17,000 crore market cap. If it goes double, it is only going to be at 35,000 crore market cap, which is fine, So I've taken a bet on Clean Science as of, I think this, I bought it some time ago, but it fell by 20%. Now I averaged it even more. So I'm keeping this as another bet. Again, I don't come and reveal all my stocks to you guys, because my risk appetite, your risk appetite is different. For example, I'm okay to take a 70 PE bet on this, mainly because I know that it is currently trading at a very lower valuation right now, even though the results are good. So it's not moving, but it has phenomenal ROEs. But I won't come and tell you this, right? If I come and tell you and the stock P goes down, I know when to exit. You will not know when to exit. You will cry. For example, a lot of guys in the chat were saying, Sir Subex. We exited Subex 1.5 years ago, but people who have not exited are still saying what is happening. So I usually don't come and reveal all my stocks. I reveal only the ones that I feel the margin of safety is slightly higher. That's all. Okay. So margin of safety should be slightly higher. But again, what was I saying? Cool. So Clean Science, Jubilant Foodworks, and what do you call that? Mahindra and Mahindra. I have taken Tata Elxsi's money out and invested in these three stocks. My Varun Beverage is still up by around 40%. Because you know it's only going up constantly, and it's again near its all-time high. So Varun Beverage is, and also it is at an average PE of what it usually trades. So this, I feel there is still some steam in it. It is not over yet, and it has been giving good quarters, good results. So this, I'm not booking profit right now. I'm going to wait. I'm going to still wait. I'll tell you when I book profit for Varun Beverage, but currently it is looking okay. It is looking all right. Even our 50,000 small case has now, if you look at our 10,000 small case, it's back in profit. Our 50,000 small case is only 4% away, which is okay, which is fine. So even in our 50,000 small case, if you look at it, right, we have got 44% gains over here. And I bought this with you guys in front of you. We bought it at 700. Now it is at what, 1,000 rupees right now. So 44% gains. These companies are also good. Tata Motors also, as we predicted. These companies are not kicking in as good as possible, also because IT got a massive backlash from the entire industry because of it going down. But I know for a fact IT eventually comes back up. But if it was me, I would, if it was me and you guys are holding the 50,000 small case, I would average it, but not now. Let's wait to see whether it's going to go down or go up after this, right? From that Nifty thing that we saw. Let's wait and check. If it's going up, I would definitely average it up. I would definitely do one more averaging round. Okay. If I can't buy the entire thing, I would average the ones that are at lower ratios right now. For example, I would buy all the ones that are at 4%, right? These things I would average, because see, this is already at 8%. You don't need to buy more, right? But this I would buy a little bit more. This I would buy a little bit more. This I won't buy. This I'll buy a little bit more. So I would do something like that and just average the ones that have gone down quite significantly. Okay. Varun Beverages ka weightage. So see, somebody is saying Varun Beverage weightage is high. It is not high. It is only at 8% right now of my entire portfolio, right? Deepak Nitrite is actually more than Varun Beverage, even after Varun Beverage has gone 44%, right? This is the beauty of diversification with respect to holding 17 stocks. This is what happens. Even when one goes up, it's only at 8% weightage. It is not too much, right? But I would average the ones that are too less, because then if it starts going up, you'll get good money. So this is how my psychology of investing, or my logic of investing, is something like this, right? So a couple of things I'm still waiting on. I'm waiting on Sharda to kick back. I'm very bullish on Green Panel, so I'm waiting for Green Panel to kick back. Electra Green Tech, I'm not worried about this. Borosil, I'm not worried about. They'll do really well. Tata Steel cyclical, so I'm not too worried about Tata Steel. But when it comes up, I would exit this and get into something else, because I thought the metal rally will continue for more time. Tata Power, I'm not worried about. Happiest also, I'm not worried about. Mindtree, little worried about, but I'm waiting for the merger to happen. But rest of it, I'm not worried about at all. I'm pretty sure these things will cover up pretty well, right? So this is how it looks right now. Cool. Got it. So that's why I said, don't worry too much. When you're investing like this, it is always good to do profit booking. Now there's another school of thought. Somebody asked me this today, that Shashank, if you do coffee can investing, then you should not remove Tata Elxsi. You should keep it forever. Correct? You agree to that? According to coffee can principle, you have to keep it forever. But my thing is, see, if you're a passive investor or if you're a passive trader then you can do this. You can leave Tata Elxsi for 10 years, don't even look at that portfolio, right? But me and you are active guys. We are looking at the market. We look at our portfolio literally every single day. We know when something is overvalued and when something is undervalued, right? So I know it, right? So when I know that something is overvalued and something is undervalued, why not reallocate this portfolio a little bit and maximize our gains? So even though somebody is doing long-term investing of coffee can, we have a chance of beating that result slightly more by doing small rejigs or small allocations, okay? Another sector that will do really well, guys, for a long period of time, which I think until BJP is there, it's going to do really well, is the defense sector. So you can start looking at some stocks in the defense sector, right? Hindustan Aeronautics, Bharat Dynamics, there are a few stocks that I am looking into the defense sector right now, only because the defense budgets are going up and up and up and up, right? And we're spending heavy into defense budgets. So again, but it's very regulated by the government. So I don't know about that. But another new stock we had found recently, I don't know how many of you will remember on Weekend Research Live. This has also given really good returns to us. We saw it, I bought it the next day. Good result, good returns are coming up. Recently we did the live and we saw this company called Finiotex Chemical. Again, is recently broken its all-time high, and if you look at this, it's going like this. Again, slightly scary. The risk over here is slightly high, but again, fundamentally slightly good, right? Fundamentally it is strong, and it has very low debt and good reserves. So I'm in a slightly safer zone right now, okay? So that is what I'm looking at right now. So these are some of the stocks that are in my radar. I am looking at it right now. A lot of people asking for anything to do with the 50,000 small case. Nothing. I would average it at this point. I would not exit anything at this point, because we are in an upward momentum. You don't exit when it's going up. You don't exit when it's going down. You exit when it's stupid, right? Like for example, Tata Elxsi is now at a stupid zone. So I would exit at this stupid zone, right? Maybe I'm wrong. Maybe it'll go to 20,000. I'll be okay. I'll be completely fine. I'm not too greedy about it, because I know if it goes down, I will cry the most. So I don't want to cry. Okay. Take small wins in life. You'll be very happy. Shanti say, you'll relax. Okay. Okay. Awesome. Okay. What else? Manali Petrochemical. Yeah. Manali Petrochemical was something that Dolly Khanna bought. But bro, look at Manali. She bought this. Okay. It went up like this. So I'm pretty sure they had insider information. Apart from that, they have another petrochemical company that she bought, right? Chennai, something with respect to Chennai. Was it Chennai Petroleum? She bought another company. I'm not sure recently, right? But yeah, I would be very careful, because they trade a lot on insider information. Me and you don't get this kind of insider information. Nahi to main bhi maza kar leta, right? If we knew insider information, it is not legal, by the way, so it's not good. Okay, guys, stop spamming. Ramu Patel, analysis of Amrutanjan. There is Akshat Srivastava who's done it. There is SOIC channel who has done it. You can go check them out. There's no point in me doing the same thing. Okay, so please stop spamming. Let's have a nice conversation here, because if you start spamming, then I'll have to start muting you, like how I'm muting some people right now. Okay, now next, okay, let me take serious people. Okay, somebody is asking 10,000 small case. Sorry, I think I missed that out. 10,000 small case currently at a profit zone. Again, Varun Beverages, ITC. I don't know how ITC did well, but ITC did well. I remember when we built the 10,000 small case, we said ITC is going to become a hedge, right? It's going to hedge your loss. It's not a volatile stock. It doesn't move. But it's gone up 14%. So it's crazy that it has actually moved, right? Everything is doing well in this. I would not change a single thing in this small case. Not a single thing. This I feel is more balanced than the 50,000 small case. This small case is more balanced, because all of this is going to do well. There's no doubt that this will not do well over a long period of time. So if you want, I would not change anything. To be honest, I would not change anything in this as well. Okay. Coming back. Okay. So now, guys, what I'm going to do is, how many of you all invest in how many of you all invest in mutual funds? Because I'm thinking I'll do I'll do four episodes on 3 large cap, 3 mid cap, 3 small cap, 3 US mutual funds that are actually good, because a lot of people have been asking me about this as well. So I thought I'll do a quick video on all of that. Best time for dividend stocks? No, boys, not a best time for dividend stocks. Dividend stocks, by the way, my returns are around 7% in this. Dividend stocks, you should have invested on this much before, guys. Not right now. You should have invested in these stocks much before. My Rashtriya Fertilizers RCF is up by 15% already. You should have invested this dividend paying stocks. You should have invested here. This is where I started buying dividend paying stocks, and I'm getting good dividends, right? I think I've got a gain of 5,000, but a dividend gain of 1,500 rupees, which has upped my portfolio up overall by 7% already. And I think now there's a lot of bonus news have come out with Gale and all that. These companies won't do well, they won't move much, right? But they'll give you heavy bonuses and heavy dividends. This is my retirement fund basically. I'm doing a retirement fund into dividend investing stocks, that if I do this for the next 20 years or 25 years, I keep SIPing into this, I know for a fact it will give me super money, lot of tax, but it will give me super money by the end when I'm 40, 50 years old, when I'm old, right? So 1 or 2 vacations is going to be sponsored by ITC and Vedanta at that point. Okay. What else? Stop spamming, guys. Stop spamming. No, I'll tell you when to spam. There's a particular segment in this episode where we spam. Let me finish all my weekend research, or else you will not learn anything. Okay. So coming back to this, let me check what is there. So this is okay. So for all the people who don't know this, so in my community, we have a paid community called the Pro Investor Academy. So we are doing live investing for 1 year in the Pro Investor Academy. I think a lot of guys are here as well. I think we did this quite recently. 31st July, we did the episode of Pro Investor Academy live investing, and it's already up 12% for all the people who are here, who are doing live investing. Guys, mine's up 12%. There are people who are up 25% also, so that is also crazy. But my allocation is only up 12%. So yeah, that is there. So that's awesome. Okay. I'm also building a new one. I'm calling it the Next 50. So I have this logic on Next 50, right? So I don't know how many of you know this. Have you heard of Nifty Next 50? How many of you have heard of Nifty Next 50? Very interesting, huh? Guys, you need to start learning all of these things as well. There is an index called Nifty Next 50 Index. Okay, we know Nifty 50 Index. Everyone knows Nifty 50 Index. Okay, let me show you the fact sheet of Nifty 50 and let me show you the fact sheet of Nifty Next 50 Index. This is how I find stocks, okay? Now, Nifty 50 Index, you know how it works, right? These are all the top stocks of the Indian economy, which are doing really well. And if you look at it, these are all the stocks, right? But then there is another thing which talks about the Nifty Next 50. What are the next 50 stocks that are going to be really good in this portfolio? And these are the top constituents of the top stocks over here. Look at this, right? If you look at the top stocks, most of it is Adani. I'm going to discount Adani for this because I don't like Adani, number one. And number two, if you actually look at the other stocks, Avenue Supermarkets, very interesting. Pidilite Industries, I don't know how many of you have seen Pidilite Industries, right? Let me show you Pidilite. Pidilite to apna, you know it, right? It's Fevicol, okay? So, damn it, okay? So Pidilite Industry again is the Fevicol company, Fevicol, M-Seal, all these companies. So it is a very habit-driven company. 1,33 crore market cap, very high P ratio. But if you look at the max chart, it is a beautiful chart, right? Because it keeps going up. It is a constant, consistent compounder. Every year result is good. Every quarter result is nice. Every year it is doing well. No problem at all. Good return. Price CAGR is also very high. Now, looking at all this, right? Look at the stock price CAGR 10%, 31%, 5 years 26%, 3 years 25%, 19%, right? So this is good. This is very good, and return on equity is about 20% here. Return on equity is about 20%. ROE, ROCE both are about 20% here. So Adani has a lot of weightage. Sadly, Adani does have a lot of weightage, but I don't like Adani. Sadly, that is my own. But if you look at this, Avenue is good, Pidilite is good, SRF is really good, Godrej Consumer Products is becoming good. Havells, I think, has gone up a bit too much, right? Havells, if you look at Havells has gone up a bit too much in my opinion. So I'm waiting for it to like calm down a little bit, but I would say these companies are really good and you should keep a track of the Nifty Next 50 also, because I like these companies as well. So I'm taking some allocation in these next 50 companies. So I'm making a small case called Next 50 1 lakh, which includes some of the Nifty 50 and includes some of the Next 50 as well. 1 lakh, what is 1 lakh? Basically each stock I want to invest 1 lakh and leave it and keep doing that like a lump sum kind of an investment, right? So that is what I'm planning to do as well. So this is something that I'm doing. But also there's another beautiful thing, right? If you look at this, all the good companies, their ROC, ROE is about 20%, maybe about 17-18%. And if you look at the stock price CAGR last 10 years, it's 28%. So I'm thinking, can we try doing a screen like this, right? Can we make a screen where we start searching for such companies? Okay, let me just stop this so I can just log in. Check. Okay, so I'm thinking, can we do a screen which actually shows us, I'm not sure, right? I'm just saying, I'm just checking right now. Return over stock price CAGR. Actually, you know what? Let me do one thing. Let me show me everything. Okay. So what they're saying is return over 5 years, okay, CAGR, okay, should be greater than 20%, because if it's greater than 20%, it's great for me. And I would also say that, remove this, I'll put sales. I want every year sales to grow. I don't care about, so sales of this year should be greater than sales of last year. Okay, great, enough. So these two things are there. ROE, ROC is left, right? ROE should be greater than, I would say, 17%, and ROCE should again be greater than 17%, right? Let's see if it actually finds something in this unknown word, return over 5 years. What? One sec. I thought these guys gave me that. One sec. CAGR. Return over 5 years only. No CAGR. Okay. Return over 5 years. Fine. Let's see if it works. So these are the companies that come. But now the problem is with these companies. What is the problem? There's some randos companies also. So what I do is I quickly do market cap change, and it shows all the consistent compounders on top over here, right? And all the other good companies. So anyone that looks like this, anyone that looks and feels like this, that has actually given good returns over the last 5 years, good sales growing every year, and return on capital employed is good, then the company is considered a good company, right? And these are the companies that fit that bill or fit that list, out of which we have our SRF here, which is Next 50, Havells here, Next 50, Varun Beverages, R50, so Tata Elxsi, you know it already. So by the way, this is another company I'm going to do a video on very soon. Start looking at this. It is doing really well. It is again something that nobody has identified a lot. It is now very overvalued, but I'm going to do a fundamental analysis of this just to show you what is this doing, why is it going up, why are people buying it. It's already gone up. Okay, so we can keep it in our watch list, but this is your watch list, guys. Right, these are the companies that you should keep in your watch list, because these are companies that are doing really well over a long period of time. Okay, awesome. Okay, cool. Next, now what we'll do, okay, chalo, we'll take one stock, we'll do a quick fundamental analysis of a stock. Come on, now is the time to spam, where I won't block you guys. Start spamming something with respect to fundamental analysis. Tell name of 4 stocks, and after that, in the meantime, I will also tell you something new that I'm planning. I want to know if you guys will watch it or not. Okay, I'm trying to do a new concept. Okay, so give me names of 4 stocks that we will do weekend research on. Okay, 4 stocks. This is 5 minutes. You can spam. Also, you have to click on that like button at the same time, or else it is quite sad if you don't click on the like button. Thoda bura lagta hai, right? Okay, chalo, tell me some stocks. And okay, in the meantime, by the time you guys tell me all these stocks, one sec, I'm just checking all the stocks. Actually, let it get over, then I'll do it. Okay. Okay, we have 1 I've got. I need 3 more. Okay, 2 I've got. I need 3 more. 2 more, sorry. Okay, I've got 1 more left. Really good companies in this. Really good companies in this. This is good. Okay, guys. Chalo. Okay, stop spamming. I put the names of 4 companies here. Choose one company and we'll do a quick fundamental analysis of this. All 4 companies are quite impressive. All 4 companies are quite good. But we'll do a quick fundamental research on this right now very quickly. But in the meantime, I want you guys to like this stream, because please, thank you. And also you can click on the voting mechanism that I've chosen, right? A lot of questions, a lot of people have a lot of fundamentally good stocks. So I want you guys to stop spamming now. It is already done. No more spam. Spamming time is over. Now it is direct execution time. Okay. What else? And in the meantime, after this, I want you guys to watch that log chart episode. You can do it in 1.25x or whatever and watch it, because there is a lot of information there which you guys should know. And only if you know all of those things, you will slowly understand how to connect the dots very soon. Okay. Okay, I think a lot of people want IEX. It's a majority today that 43% of the people want to do IEX. Out of 465 people watching, only 163 people have actually voted right now. Come on, guys. Literally 50% of you guys have not voted. It's completely anonymous. It's completely free. There's no charge to vote. I don't know why you guys are not voting. But yeah, just vote and finish it off. Let's finish it off. Okay. Okay. I think I'll just set up everything then. Okay. Okay, I think IEX is the clear winner. I'm going to stop the poll. Okay, IEX is the clear winner. Okay, now guys, before I go and do IEX fundamental review, I want to know one more thing from your end. Okay, I just want to know a quick poll from your end. Now the question is, okay, what I want to do is I want to start a new segment. Okay, I don't know what the segment is. I'm not calling it anything right now, but basically I take one person either from YouTube, either from my Instagram or from my community. The first few will be from my community itself, and I want to take that person, right? That person will come and they will show me their portfolio, and I will sit and try to make that portfolio a very holistic portfolio depending on their goals and depending on their age and depending on what they want to do. Basically like a proper portfolio review. We did this once, I remember we did a portfolio review with someone and a lot of people liked it. So I'm thinking, should we do something very similar where we do portfolio review? I take one person and that person comes live. It is not just me, it'll be me and that person. We'll have an Excel sheet. That person will show me their entire portfolio and I will figure out a way to rejig that portfolio. Why is that important? Because if I will get people from different age groups. I will get people who's in college. I will get people who are not in college. I will get people who are 30 years, 40 years, 50 years of age. So anyone who's in that category will slowly understand and understand how other people are doing and how I should do, and you learn a lot. So I'm planning to do this at least once or twice in a month, not too many. But I want to know from your end, do you think something like this would be nice? Do you think something like this is good? Basically, portfolio, I've not named it. I don't even know a good name. If you guys have some good names, put in the comment below. But it was, yeah. So basically it is someone saying I have 224 stocks. So my first thing would be get that 224 stocks down to 15 stocks, right? So we can do you think we should do something like this or not is my only question to you guys, right? It's a very time consuming effort. It takes a lot of time for me to do this. I will have to pre-record it. I will have to do it on Zoom and then edit it and then upload it, but it will be massive value, and it is not something that I'm looking at some news article and doing. This is live, right? So it is going to be beautiful because it is a real life person, and the experiences for every show me your portfolio. Wow, Sachin, that's actually nice. Show me your portfolio is really good. Show me your portfolio. Okay, so I'm going to do show me your portfolio with somebody, and we will see everyone's. It's not a reaction. I will do show me your portfolio, and we will understand why someone's done it. We will understand psychology in that, and we will understand how we can rejig it and make it into a perfect portfolio for everyone. Okay, awesome. I'll try to be little more now. So the thing is, last time I couldn't do it very easily because it's very difficult to get people from YouTube and Instagram to do this, but I think now because I have my community, I have the private community, it's very easy for me to take people from the private community and do a session. So I'm going to do that with them, right? So we'll do something like this. We'll do show me your portfolio or whatever, right? Cool, awesome. I have 260 stocks, boss. Don't do it. Okay, chalo. Now, first things first, let's look at IEX and I'll tell you what is happening with IEX. Okay, so let me just open it. For all the people who don't know IEX, I have been tracking IEX a lot. I hold IEX as well. It's currently down 40% from my holdings also. Okay, look at this. So IEX basically has dropped quite significantly from its top of 300 to almost 50%. And my portfolio in IEX is down around 40%, right? But I have averaged it. I have not sold it yet. Main reason is because I have also done something very similar, a video very similar called HPX versus IEX, and that is one of the biggest reasons why IEX took a massive beating also, right? Now, if you look at this, IEX has constantly been going down, and IEX was also considered the darling of the stock market in 2021, right? In this era, in the 2021 era, everyone was talking about IEX. Everyone was like, power is the future. We are going to go to the future. IEX matlab best, right? Or else don't talk to me about anything apart from IEX. So IEX is obviously, just to give you guys an understanding, it's called Indian Energy Exchange. It is the largest energy exchange in India right now at almost 90% market share. All the volume is currently being traded on IEX. It also went up because of Adani and Tata Power were trading on this power exchange as well. They were trading their power units on this also. So it is beautiful. Okay, it is beautiful. A stock like this is very nice. It's very good, right? But why did it go down quite drastically, right? even though it was considered good. And by the way, it is more of a tech company. It is like National Stock Exchange or Bombay Stock Exchange. So it's a tech company. So when it's a techish company, the ROE and ROC is very high because they don't need manufacturing units. They don't need anything. They're a platform, okay, for trading electricity and carbon certificates. Now, if you look at their exchanges, right, if you look at the quarterly results is going up. Look at this, 90, 109, 114. But then on March onwards, it started going down a little bit. But look at their operating profit margin, 85% operating profit margin. It's insane, right? They're making good amount of revenue. Everything looks good, right? Their sales are also growing year on year, but last 2 quarters have been bad. They don't have borrowings. They're good with reserves. But there was one problem that happened which kind of went into a negative zone, right? Couple of things that happened. Number one was for it to fall so much. A new exchange was announced by India, okay? India said that we are going to launch a new exchange, okay, called the HPX. What the hell is this? Hindustan Power Exchange. Okay. So Hindustan Power Exchange was launched recently. We spoke about Hindustan Power Exchange, but is it going to be a problem? Is it going to affect anything? Right? We don't know. But the problem was Hindustan Power Exchange started doing really well, is going to do really well, and it is also promoted by 2 people, Bombay Stock Exchange and ICICI Bank. So it has big backings also for it to come in the market, right? Now, currently understand, IEX is trading at a massive premium. IEX is also trading at very good rate of return, and it is also trading with maximum market share, 90% of the time, right? Now, if you look at this, sadly, what is happening is right now, the stock P is fallen from 48. So earlier, the stock P was trading at 100, right? So as I told you, same logic again. Stock was trading at 100 in December 2021. The result came bad. What happens? It will take a massive beating. It has come down 50% from there. Same thing happened. It was trading at 100, and the December result, after that March-December result, was not attractive enough, right? Because they were saying it's a growth story. Public was like, growth dikhao. Growth hi nahi tha, right? So that is a problem. What is the need for HPX? Very good question by Souvik, right? There was no need for HPX. The reason why HPX is coming in, because 2 things, right? Number one, the power market in the next 5 years or in the next 10 years is going to be a very big market, right? And IEX taking all of that, aisa nahi chalta, right? You always need a Zomato, you always need a Swiggy. So similarly, IEX had some rival, needed some rival, nobody was there to rival it. So Bombay Stock Exchange and ICICI Bank came together and started the Hindustan Power Exchange, where it does something very similar to fight the thing. Always you should have 2 people in the space, or else it becomes a problem. So that is where this came in as well. Now, when HPX came into the picture, it created a more negative sentiment for IEX. But is something wrong with IEX? Nothing's wrong with IEX. Is something wrong with the volumes of IEX? Nothing's wrong with the volumes of IEX. Does it still have market share? It still has market share. But the only way IEX will make a lot of money is when their trading on the platform becomes big, right? What do I mean by trading on the platform? That means energy units are traded very heavily by this. Let's look at the recent PPT, right? Now, again, IEX is a company that will do really well, not right now, but maybe in 2025, 2026, 2027, right? Not right now, because time hai uske liye. But let's look at it again once more from a holistic view, right? Now, sector, now, as I said, winning sector equal to winning stock equal to good returns, okay? Winning stock in a losing sector, bad returns. So this is what's happening. The sector is now becoming attractive because power has become something which is important right now, right? So this is how the electricity value chain goes through, right? First generation of the electricity happens through a de-licensed activity. Then the world's largest network comes, then transmission, then distribution, and then finally consumption. And we've seen this in our, those big towers keep going transition, right? So it keeps going that way. This is what is happening right now. And install capacity has grown faster because now we are going into a zone where, power is become very important, right? But there's also one alternate theory I would say here. What is an alternate theory? Do you know what an alternate theory is? The alternate theory is, look at this, right? The large businesses, okay, big industries, and even houses, a lot of houses like ours, right? Big houses like ours and large industries, we're all moving into solar energy and renewable energy. We have to put solar panels on top of our roof. So I don't need a lot of transmission and I don't need a lot of distribution. So invariably, even though we're moving into renewable energy and IEX depends a lot on power exchanges, that is also a negative element for IEX, right? Because if you look at this, then it is a problem. Somebody is saying different analysis by Akshat. Akshat might have a different analysis, man. I'm okay. This is my analysis, right? He can have a different view. I can have a different view. It's completely all right. Doesn't mean his view is wrong. Doesn't mean my view is right. We both can be wrong. We both can be right. Don't know, right? I don't believe that. So basically, what I'm trying to say with IEX is that even though it has massive power volume and HPX has come new into the market, it's going to be very difficult for HPX to come and take over IEX. It is not a thing that will happen right now in the next few years. But next 4 or 5 years, power exchanges, power will be big when we go into renewable power, when we go into carbon trading, when we go into carbon trading certificates. There are going to be companies, industries that have to get carbon trading certificates as well. So those things, if you look at it from a long-term perspective, India looks very nice with respect to power. But if you talk about the housing department, a lot of people are already going into, solar energy. So that becomes a small problem as well, because the market share goes down when solar energy goes up. That's where Borosil renewables start coming back, right? So again, that is the thing. So if you come back to how the sector looks like, so sector has a few things. Now this is very important to look at. If you look at how the power sector is constructed, power sector has two things. One is long-term contracts and short-term contracts. Okay, please understand this. PPA is called purchasing power agreement. Okay, there's long-term purchasing power agreement. 25 years we will go at these rates and we will continue to go at these rates, right? Then we have short-term agreements, which is now becoming a new thing because the power exchanges are also changing a lot. So that is also happening right now. So what is happening? Fast growing exchange markets. Yes, the market is growing fast, right? Increased potential to deepen power market. Yes, because India is very underpenetrated when it comes to power industry. Exchange share. Now this is again important. Exchanges share in the short term market. Share of exchanges in total consumption, share of exchange in total, I don't know what this is, short term market and long term market. Again, that means the share of exchanges again is very low in this entire market. So that means for it to become big, there is a lot of scope as well in this market. So IEX, as I said, I would not discount this so soon. Okay, if it has gone down by 45%, I'm still holding it. I have averaged it, in fact, so it's come down to 25% average, but still loss. Okay, but I'm not looking at this from a 1 year play. I'm looking at this from a 4 or 5 year play, because I'm looking at it from a long term perspective. Might be wrong. Fine, might be wrong, right? I will not even cry even if I'm wrong. The reason why I won't cry is because this is not even 10% of my allocation. This is maybe 5-6% of my entire portfolio. But I think it can do well. I don't think it'll do bad, right? Other companies are also there to do well. So I feel that this can do well over a long period of time. Only a couple of problems. Okay, this is going to become very big going ahead in the future. RECs, which is renewable energy certificates, this will become a very big thing in the future. Okay, please keep that in mind. The only negatives, as I said, is solar energy that can counteract this a little bit. And another negative energy, it seems. Another negative element, I would say, it's a very regulated market. It is driven a lot by the government. And whenever something's driven a lot by the government, it is slightly scary. Okay. Company has been giving good CAGR growth, 33% CAGR. Again, we don't know what's going to happen right now, but it's good. Now look at this. Market share is 94%. Now HPX has to come and take out this market share. Can it do in 2 minutes? Is it Maggi noodles that will come in the next few months and 5 months, 6 months, and it will take out the market share of IEX? It's not going to happen, right? Same with green power, same with REC, and same with ESC certificates, right? So all of these things cannot be uprooted in one go. This will take some time. But the only way this entire thing will win is if this sector wins. So we need the sector to win. So as and when Adani Power wins more contracts, as and when Tata Power wins more contracts, as and when we come into electric vehicles, right? When we come into all of these things, this becomes slightly better. Cool. So all of these things will happen. Let's see. It is a good company. Nothing wrong with this. So they basically do transaction fees. This is how they make their money. So that means more volume, more revenue. More volume, more revenue. Okay. So they get 82%, 83% of the revenues coming from transaction fee. They have something called as admission fees. So even to be a part of this and to start trading, you have to pay 1 annual fees and admission fees, and 12% annual income. Other income is what they have, right? Customer testimonials. So I'm not going to look at. Yeah. Now, by the way, IEX is something else. Okay. I don't know if you have seen that IEX versus HPX video, but in that I mentioned this. IEX also has a new company called IGX. Okay. It's called Indian Gas Exchange, which is going to be number 1 in natural gas trading right now. Again, this is very new. The revenues of this company have not kicked in yet. It's only at 1 crore PAT right now, which is profit after tax. It has not kicked in enough, but if this starts kicking in as well, that will become a very big thing. So again, we have to see what is good, what is bad. Ideally for them, long-term contracts don't do well, short-term contracts will do really well. So that short-term contracts, you can take advantage of price fluctuation also. Demand for electricity is a growth driver for sure. Phasing out old and inefficient thermal plants, great. So this is very important. Favorable policy and regulatory initiatives. If this goes ulta, no, if this goes ulta, then they become bad. Then the company becomes bad. Now company doesn't become bad, the sector becomes bad. So this is very important, how the CERC certificate comes into the picture. How do you do RECs, right? How do you trade RECs? If you have to go through an exchange, or can you bypass an exchange? So all of these small things are important when you look at IEX, and that is why I feel, I don't know what Akshat Srivastava's views were. I don't know what his views are. I've not seen that video, but I don't know if it's positive or negative also, but that's not my lookout. My lookout is to look at my news, and my way of investing is different. His way of investing is very different, right? No disrespect to anything, right? My job is to beat the index. I'm not fighting him. I'm fighting only one person in my entire life, and that is Nifty. 1 year Nifty returns 7%. I want to get more than 7%. That is my job. My goal, I'm not fighting with anyone. I'm fighting only with Nifty 50. I want to get more than 7% returns in a year. Because why? Inflation is at 6.7%. Nifty is at 7%. Post-tax will give you 6% only. Right? So I want to get at least 10% returns every year. And my fight is with myself to get 10%. Understood? Awesome. Okay, wait. Okay, so guys, I hope you guys enjoyed it. It's been 1 hour. We have been doing the weekend research session. Sorry, I couldn't come for a few days, had COVID. But I hope you liked this episode. I hope you enjoyed it. I will try to do that because you guys told me to do this. I think from September onwards, I'll do show me your portfolio kind of a topic. But if you have any other good ideas and good suggestions, put in the comments below. And I will take that as a feedback, and I will incorporate that in my videos as well, which is basically like a portfolio review. Okay, chalo, awesome. This is me, Shashank Udupa, signing off. I hope you guys enjoyed this episode. I hope you guys liked this episode. I'm going to see you guys soon. Take care. See you. Bye.